$72,912. That is the number Bitcoin printed overnight while US markets were closed, the lowest price since February. And it did not happen slowly. It happened in a single session overnight while most American holders were asleep. US airstrikes on Iranian military sites near the Strait of Hormuz hit the wires around midnight Eastern. By the time US markets opened, $958 million in leveraged positions had been liquidated across 167,000 traders. 93% of that was longs. Traders who were positioned for a recovery, traders who had been holding through the pullback from 82,000, waiting for the bounce, got wiped out in one session. And layered on top of the airstrike news, a fund manager published a warning this morning that a $150 billion Treasury liquidity drain arrives between now and June 5th. The monthly close that decides whether this is a bull market or a bear market is 3 days away. Bitcoin is $3,000 below the line. This is the hardest 72 hours this cycle has produced. The Bitcoin report is live. I am AI Ryan Matta. Real Ryan has been watching this situation develop since the overnight session and put this script together this morning while the liquidation data was still coming in. Thursday, May 28th, 2026, 3 days from the most important monthly close Bitcoin has faced in years, and the market just delivered its most violent single session of the year at the worst possible moment. Let us walk through every piece of what happened, why it happened, and what the next 72 hours actually mean for your Bitcoin position. Start with the airstrikes because that is the trigger and the context matters. Last weekend, Trump announced a peace agreement with Iran had been largely negotiated. Markets celebrated. Bitcoin bounced from $74,250 back above $77,000 in a single session. Oil fell below $100 per barrel. The ceasefire trade was on. Then Wednesday night, U.S. Central Command carried out airstrikes on an Iranian military site near Bandar Abbas, which sits at the mouth of the Strait of Hormuz. They also shot down 4 Iranian attack drones that were fired at a commercial ship in the strait. The U.S. called the action defensive. Iran's foreign ministry called it a gross violation of the ceasefire agreement established in April and vowed severe repercussions. The Treasury Department simultaneously imposed new sanctions on Iran's Persian Gulf Strait Authority, accusing it of extorting vessels transiting the strait. In 72 hours, the market went from pricing a ceasefire and a reopening of the world's most critical oil shipping lane to pricing fresh military strikes, new sanctions, and an Iranian vow of retaliation. Every trade that had been built on the peace deal thesis got unwound simultaneously. Oil spiked, risk assets sold off, and Bitcoin, which had been holding support at 74,000 despite 2 weeks of ETF outflows, finally gave way. Here's what the liquidation data actually shows you. $958.8 million in total liquidations over 24 hours across 167,706 separate traders. 897 million from long positions, 61 million from short positions. That 93% long skew is the key number. It tells you the composition of who was holding Bitcoin into this event. These were not short sellers getting squeezed. These were bullish traders, people who had been positioned for a recovery from the 74 to 77,000 range, expecting the Iran situation to resolve, expecting the ETF outflows to reverse, expecting the monthly close to hold above 76,000. All of them got stopped out or margin called in a single session. And the largest single liquidation was a $15.34 million Bitcoin position on Hyperliquid. One trader, one position, $15 million gone in a session. Bitcoin liquidations led the total at $386 million. Ether came in second at $246 million. The cascade mechanics are straightforward. When the price drops fast enough, leveraged long positions hit their liquidation threshold. The exchange automatically sells those positions at market. That selling pressure pushes the price lower, which hits more liquidation thresholds, which creates more automatic selling, which pushes the price lower still. The $958 million total is not just the result of the Iran news. It is the result of the Iran news triggering a cascade through all the levered longs that had been stacking up during the May range. Now, let me tell you about the second thing hitting Bitcoin this morning that is not in the headline, but might matter more in the next 8 days. Michael Kramer, founder and CEO of Mott Capital Management, published his market analysis note this morning with a specific warning. US Treasury operations between May 28th and June 5th, meaning right now through next Thursday, are expected to drain approximately $150 billion in liquidity from the financial system. Let me explain what a Treasury liquidity drain is in plain language. When the US government needs to fund its spending, the Treasury sells bonds and bills to investors. When investors buy those securities, cash flows out of the banking system and into the Treasury's account at the Federal Reserve. That cash is no longer available for other investments. It is sitting in a government account. The financial system has 150 billion fewer dollars circulating through it. For normal assets like Treasury bonds themselves, this is a routine event. For risk assets like Bitcoin, which depend on the availability of speculative capital to support prices, a temporary but meaningful liquidity drain creates headwinds that show up as selling pressure or reduced buying support. Kramer's direct quote from his note this morning: "In my experience, Bitcoin tends to be a better liquidity indicator than most other instruments. If the Treasury settlements are a drain on liquidity, then Bitcoin could be heading much lower." He specifically noted that Bitcoin has already broken key support near 75,000 during an 11% pullback from recent highs, and that the Treasury drain arriving now makes the risk of further downside concrete rather than theoretical. The timing could not be worse. The largest short-term liquidity drain of the month lands in the same 8-day window as the monthly close and the May 29th options expiry. Now, let me give you the full picture of where Bitcoin stands in the asset rankings right now, because this is a number that should land hard for anyone who bought into the digital gold thesis. Bitcoin has fallen to 13th place among the world's largest global assets. Its total market capitalization at $72,900 per coin is approximately $1.46 trillion. TSMC and Broadcom have both overtaken Bitcoin. Micron Technology recently crossed the $1 trillion mark on the back of the AI semiconductor rally. Bitcoin is down 11% year to date and nearly 30% over the past 12 months. Meanwhile, gold surged to a record $5,595 per ounce in January before pulling back to around $4,500 today, and silver ran from below $60 to $121 before its own pullback to the mid-70s. The framing here is important. Bitcoin dropped to 13th, not because Bitcoin itself got worse. It dropped to 13th because AI semiconductors and precious metals had a historic year, while Bitcoin had a difficult one. That is a relative performance story, not an absolute fundamental story. The 21 million coin supply cap did not change. The network did not break. The adoption curve did not reverse. But in a world where Nvidia, TSMC, Broadcom, and gold all delivered massive returns in the last 12 months, Bitcoin's 30% decline looks painful in comparison. And that perception matters because it affects where new capital chooses to allocate. Here's the part of today's data that most people are not going to read past the headline. CryptoQuant published analysis showing that Binance spot Bitcoin trading volume has dropped to $36.4 billion. That sounds large, until you compare it to the $198.6 billion in volume recorded in October 2025 when Bitcoin hit its all-time high. That is an 81% collapse in trading volume. Gateway.io saw a 79.6% drop. Bybit is down 66%. The market is at roughly 1/5 of its peak activity levels. CryptoQuant's analyst Darkfoss noted that this volume collapse can be interpreted constructively because it suggests the selling pressure behind the current retracement is gradually losing momentum. And then he cited the historical pattern that matters most for long-term Bitcoin holders. It was precisely after spot volumes collapsed in 2023 that the bear market came to an end, followed by the return of volatility and the recovery of the bullish trend. Bitcoin went from $14,000 in November 2022 to the 16,000 range and just sat there with almost no volume for months. Then volume returned. And then price followed. The volume collapse is not a guarantee of anything, but it is the pattern that has preceded every Bitcoin recovery in this asset's history. There is also a long-term technical picture that Cointelegraph published earlier this week that deserves to be in this episode because it provides the framework for understanding why the level Bitcoin is fighting for right now, $74,000, is so critical. The analysis describes a massive cup and handle chart pattern that has been developing since Bitcoin's all-time high of 126,000 in October 2025. A cup and handle is a technical formation where price drops from a high, forms a rounded bottom, recovers most of the way back to the high, creating the cup shape, then pulls back slightly to form the handle before breaking to new highs. The target for this particular formation is a minimum price of $220,000, but the entire pattern is contingent on Bitcoin holding the $74,000 level as support. If 74,000 breaks on a sustained closing basis, the cup and handle pattern fails. The next major structural support below 74,000 is in the 60,000 to 62,000 range. This morning, Bitcoin touched $72,912. It briefly violated the critical level. The question for the next 72 hours is whether that violation was a wick, meaning a brief overshoot that gets rejected and recovered, or whether it was a genuine breakdown with follow-through selling that confirms the pattern failure. As of right now, Bitcoin is attempting to recover back above 73,000. The recovery is tentative. The geopolitical situation remains unresolved. The Treasury drain begins today. Let me give you the honest framing for what the next 3 days actually mean. May 31st is the monthly close. Tom Lee established the thesis that if Bitcoin closes May above $76,000, the bull market is definitively confirmed because Bitcoin has never in its history closed 3 consecutive months up while inside a bear market. March closed up, April closed up, May above 76,000 would make it 3. At Bitcoin's current price of approximately 72,000 to 73,000, recovering $3,000 to $4,000 in 3 days requires a 7 to 9% move in 72 hours against the worst macro backdrop of the year. The Iran conflict is active and escalating. The Treasury drain starts today. The dark pool data from this morning shows someone sold $1.3 billion worth of BlackRock's IBIT Bitcoin ETF in a single block trade, the largest single dark pool ETF sale of the year. The monthly close above 76,000 is not impossible. Bitcoin has made bigger moves in shorter windows many times in its history. But the path of least resistance in the next 72 hours is not higher. The short-term picture is the most difficult it has looked all year. Here is what has not changed. Strategy's Sailor bought 24,869 Bitcoin at an average price of $80,985 just 10 days ago. His position is underwater by roughly $8,000 per coin at today's price. He has not sold. He has not announced any plan to sell. His model is built on the long-term accumulation thesis that short-term price pain is irrelevant to the structural outcome over years. Whale wallets holding more than 1,000 Bitcoin added 47,000 BTC in the 2 weeks before today's crash, as we covered in yesterday's episode. That accumulation happened at 76 to 78,000. Those wallets are now sitting on unrealized losses and have made no indication of selling. The cup and handle targets $220,000. The volume collapse mirrors the 2022 to 2023 pattern that immediately preceded the recovery. The structural supply deficit, 4% of all Bitcoin sitting on Strategy's balance sheet alone, over 180 publicly traded companies holding Bitcoin treasuries, is not going anywhere. Those coins are locked up. They do not come back to market during geopolitical shocks. The honest answer for a Bitcoin holder watching this episode is that the next 3 days are going to be uncomfortable. The data is not bullish in the short term. The Iran situation has re-escalated in a way that markets did not expect after Monday's ceasefire optimism. The Treasury drain adds a mechanical headwind on top of the geopolitical one. And Bitcoin is sitting on the knife's edge of the technical level that determines whether the long-term chart pattern survives. Watch 74,000 as the critical line for the cup and handle. Watch May 31st for the monthly close that decides the bull market confirmation thesis. Watch whether the Iran situation de-escalates or continues to worsen, because every escalation has hit Bitcoin by $2,000 to $5,000, and every de-escalation has bounced it by a similar amount. And watch ETF flows, specifically whether the $1.3 billion dark pool IBIT sale this morning is a one-off event or the beginning of a new wave of institutional exit. The short-term picture has never been harder in this cycle. The long-term picture has not changed. Both things are true at the same time. The test of conviction in the next 72 hours is whether you understand the difference between the two time frames and have sized your position accordingly for both outcomes. Subscribe right now if this kind of real-time breakdown is useful to you. We publish every single trading day, and this is exactly the kind of session where being ahead of the data matters most. Takes 2 seconds, completely free, and it means you get this analysis every morning before the US market opens. Head to bitcoinmaxing.com before you close out. Real Ryan's free Bitcoin retirement calculator is there. Plug in your stack, your time horizon, your accumulation plan, and it runs the actual math across different price scenarios so you know what you are actually building toward regardless of what happens in the next 72 hours. Link is in the description. I am AI Ryan Matta. We will see you tomorrow.